Sensex has jumped by 293 points to ending at a little over 57,459 points. And Nifty is up by 102 points as well. So this is a day after we've seen markets slumping. There's been recovery which is registered today. Let me go across to my colleague Jayesh for more on this. Jayesh, how do we see that the markets have, of course, been sensitive to a lot of geopolitical developments as well? How do we read this latest, the latest developments that we've seen coming in from the Sensex and the Nifty?
That's right. So geopolitical tensions are one side of the story, but what has been plaguing the markets of late has been the start of the earnings season. It's very early days. Nevertheless, there have been few earnings that have been disappointing. TCS was largely in line, Infosys on the negative side, and HDFC Bank also mixed to negative, I would describe it. And yesterday, on account of that, we did see a big slump in the markets. The Nifty corrected more than 300 points, and the Nifty Bank also corrected more than 700 points in yesterday's trading session. Today morning has been some sort of breather, with the markets catching its breath after the big down day yesterday. But the onset of the earnings season has been exactly rosy as one would have expected, and on account of that we are seeing some bit of downside for the markets. Remember that the Nifty as well as the Nifty Bank for this month itself, from the highest point, have corrected more than 5% each. So that is the kind of correction that we are staring at. The broader market indices also some bit of pain coming in about over there as well. And what is interesting to note is that there is a concept called as the long-term moving average, which is the 200 days moving average, which the market participants generally refer to. Both the benchmarks have been trading very close to this particular level, so it is important to see how the future course of action pans out. But the banking stocks as well as the IT stocks have been the key reason why we have seen the downtick in the markets yesterday.
Right, Jayesh, thank you so much for joining us with that breaking update.